All right, welcome to Coffee with Marcus and Mark. In this show, we are going to talk to you about what's happening in the markets and how we are trading it. Today is Wednesday, August 30th. Is it already the last day of the month? No, one more. So, one more. But hey, yesterday stocks climbed higher for a third day in a row. So, has the recovery finally arrived? We'll also talk about our positions and we'll show you a picture perfect earnings play. And stay tuned. Anyhow, if this is your first time here, I'm Markus Heitkoetter. This super smart guy over there is my head coach, Mark Hodge, and we are real traders who trade live accounts. So therefore, we got a lot of trading experience, and we're showing you how we trade these crazy markets. So trust me, we know our stuff, and we're not afraid to tell you like it is. So if you're here looking for some honest insights into the fascinating world of trading, you are in the right place. Now, with that said, yeah, stocks are recovering. So, is that it? Uh, is this move lower that we saw here over the last few weeks in August? Is it? I mean, stocks are really trying to make a nice recovery going into the final days of August. I don't think it's going to happen. I mean, this is where we started August, somewhere around here. So they would have to go up all the way, and we have only one day left.
I I don't think we're gonna go positive for the month, but I don't think that we should just discount this move higher because it's been a pretty impressive recovery. Up 3 days, working on number four for the S&P, and up 3% since Thursday's close. So a pretty nice recovery off of these lows.
For sure, for sure. So what's driving it? Let's talk about it. And in order to do this, we probably have to take a look at the economic calendar. So let's take a look here and see what's happening this week. So nothing going on Monday. We also know that earnings are a little bit lighter right now, so we are winding down earnings. But looking at this, it's supposed to be a big week for economic reports, but more towards the end of the week. But traders are already reacting to the first reports that we are getting here.
Yeah, and what's driving this rally? Bad news. Well, it's not horrible. It's not horrible, but we've had some data that suggests that jobs are starting to stabilize a little bit, coming down. Yesterday, we had JOLTS job openings at the lowest, I think it was since March 2021. This morning, we had ADP non-farm jobs. And we mentioned yesterday the buzz is now stability in the job market. So 177,000 jobs were added in August. This was much lower than what was expected. And also what was announced in July. So 371,000 jobs, as you just showed, Marcus. This is a big, big difference.
Yeah. Plus, also, then we had the preliminary GDP being reported. And this is where economists expected it to remain like in the previous months at 2.4%. And it went down to 2.1%. And also, the price index went down to 2.0%. And that's just showing, okay, so we have fewer jobs. That we had here. Consumer confidence came in also lower than expected. Now the preliminary GDP is coming in lower than expected. So it means that the economy is slowing down. And usually that's a bad sign for the markets. But right now, since this is what the Fed wants and the markets are driven by interest rates, that's where traders are celebrating these bad news.
Yeah, because it's not just one data point, it's multiple data points that the Fed will consider for their monetary policy decision and whether they keep rates elevated, whether they increase them, whether they cut them. And with this slightly negative news, but not just like crushing horrible, like the economy is going to crap. Traders are liking this for what the Fed might do.
Yeah. The big one, of course, tomorrow morning coming out, the core PCE price index, the Fed's favorite inflation gauge. And after these news, there's hope that it might even come in lower than expected at 0.2%. So we'll see. And then on Friday, of course, the jobs report coming out. But right now, as said, these bad news, they're not crushing news. So therefore, traders are kind of liking it. And if we move over here, for example, to interest rates, we see that over the last few days, interest rates have the yield has come down.
Yeah, and I think that that's a great sign. And I know that it's a little premature to be super focused on Fed funds futures and probabilities, but that's been flopping all over the place. And with this data now, I don't know if you look today, but look at that 90.5% probability that the Fed keeps rates the same. I believe that was always the case, but it just it starts to show that this is what investors feel is gonna be true. And you look at the probabilities in the future, and that's calmed down a bit too.
Yeah, we will take a look at this, but if you look at this right now, the 90% that we are seeing here right now, this is the highest that we have seen over the past few weeks. So this here is from 1 month ago, this is from 1 week ago, this from yesterday, and we see 90%. I mean, traders were never that certain that the Fed will not raise interest rates. But hey, again, we are still ways away from the next meeting. So a lot can happen there. We're still 21 days away. And these are just a few data points, the big one coming out tomorrow. But yeah, you talked about the probabilities, and the probabilities also shifting right now because a few days ago, we still saw that traders are factoring in another hike in the November
Sure.
meeting. And now it seems that traders believe that based on this data, the Fed might keep interest rates the same.
Yeah, and that would be a good thing. And coming down significantly in 2024, and that's why if we get absolutely horrible economic data, everybody starts talking recession and the Fed's going to crush the economy, right? But with this data, it's just the perfect combination for things slowing, things weakening a bit, and the Fed being able to lay off.
Yeah. So let's see what's happening in the markets today. I brought up our heat map here, and we see that on the heat map for the S&P 500, we're a little bit all over the place. So
Yeah.
it's not that it is clear cut. I mean, we have some red here from Meta. Google is slightly up, Tesla is slightly down, Nvidia just keep marching higher. Apple higher because they announced that the next event is just around the corner. What did they say? September 12th or 14th? I mean, it just in a couple of weeks from now.
Yeah, I got an email, but I can't remember the date.
Yeah. So anyhow, just looking at today's heat map, it's kind of a mixed bag, right? I mean, yesterday tech stocks were rallying, the magnificent seven that have been driving it up. I mean, they were all higher. But today it's kind of the pause. And I think it's because we have this super important inflation number tomorrow.
Sure. I mean, there's been a pretty big move, and there's more uncertainty with data tomorrow and also Friday, so that would make sense.
Yeah. Talking about uncertainty, I mean, the VIX is just moving lower. So, I mean, traders are not fearful. As I said, there's a little bit of uncertainty, but there's no fear in the market. This is what we are seeing right now.
Yeah, with the bigger drop, we saw that spike, and so this is based on S&P 500 options, and traders basically anticipating bigger moves, which would indicate fear, and just not the case back at these low levels.
Yeah. All right. A couple of things before we talk about our positions. One of the things that we need to mention is just Bitcoin. We talked about it yesterday. Bitcoin yesterday having a fantastic day. Today pulling back a little bit after we had this news that there might be a Bitcoin ETF coming soon.
And yeah, maybe a little profit taking. I mean, Bitcoin just seems to be so quiet that it's like you get excited for a little bit, you get a pop, and then you go sideways. Not the volatility that we had, years ago. Coinbase, interesting that Coinbase, though, not pulling back like Bitcoin, because Coinbase also got a bump on the news that uh, well, that there was a decision in court that could pave the way to a spot Bitcoin ETF, and Coinbase up a little bit.
All right. Well, that works. Said, let's take a look at our positions before we talk about the earnings play that popped up on the whale scanner today. But let's take a look at our portfolio. ALB, I mean, ALB yesterday was just on fire. This is where today it's pulling back a little bit, and I'm okay with it pulling back a little
Yeah,
bit.
exactly. So we sold the 192.50 calls. I own shares at 190. You own shares at 192.50. And with this big move higher, as we get further away from the strike that we've sold, it makes it harder to collect some decent premium on a roll, right? So this pullback is welcome. In a picture perfect situation, we see it pull back to 192.50 and we either roll out, get some fat premium at the 192.50 for next week, or we roll out and up, possibly maybe going 192.50 to 195. So this pullback's looking good for us.
Yeah, I mean, I would be happy if I could stay this trade for another week. If we close above 192.50 on Friday afternoon, we will get called away. But we made some good premium on this one. I mean, this trade is just working out great. That's a
Oh
textbook
yeah.
trade here.
Oh, absolutely.
All right. Not so textbook, Canadian Solar, CSIQ. That is a trade that we had. We both got assigned at 35. And then it was plummeting right now. I mean, we talked about it yesterday. The V shaped recovery. CSIQ is listening. Okay, keep marching higher. I mean, yesterday, a fantastic day. Even today, up another 1.5%. So a nice follow through. We'll see what happens here.
Yeah, 4.9% yesterday. If it stays positive today, that's four winning days in a row. I'll take it. Keep on going at CSIQ.
Yeah, keep on going, little buddy. You'll be just fine. All right, NEE. That's another one. So surprising. Yesterday, we there was the ex-dividend date, so we moved lower yesterday. That was kind of expected. The
Sure.
move today, where we are down another what is it, 0.87%. That is surprising me a little bit.
I agree. I mean, yesterday's loss was 51 cents and the dividend, ex dividend, was 47 cents, right? So,
Right.
factoring in that 40-cent dividend, it was really a 5-cent loss for the day or 4-cent loss for the day. Today being down almost 1%. Interesting. I mean, we're getting back to some lows that we've seen around 67, maybe testing it.
Yeah. Let's see what's happening
And
here
I
and where
just
we end up
froze.
the day. I think I need to draw the arrow so that NEE knows what to do here.
Yes, yes. Okay, I'm back. And that is old school trading secret.
Magic tricks. Trading magic trick. Yes. That's how professional traders mark their charts. In the direction we want the stock to go. PNC. PNC Financial Group. So I mean, yesterday also great day. Today down 0.5%. I mean, there were some news that possibly regional banks get some new rules and regulations. And I must say, when I saw the news this morning, at first thought, oh my gosh, PNC will be tanking. But I mean, down 0.5%. I think this in line with what we see overall in the market right now.
Oh, sure. Sure. A
All
little
right.
bit mixed.
So we before we show you a cool earnings play that popped up this morning, do me a favor. If you want to see it, click on like, and we'll wait for the likes here for just a moment to trickle in. And while we do this, we take a look at the overall markets and see where we are today on a 5-minute chart. The S&P 500 at first continuing the rally from yesterday. Right now, pulling back, and this is where we just see that there is a little bit of uncertainty in the market. I mean, we're trading slightly higher. The S&P up 0.2%, the Dow at the unchanged mark. The Nasdaq still up 0.3%, probably mainly driven by Nvidia. That's nicely up this morning. And I just noticed that I'm not sharing my screen. There we go. Now we're sharing the screen. Okay. So this is what's going on. All right. Want to talk about the earnings play, Mark?
Sure.
All right. So the earnings play this morning was actually in HPQ, Hewlett Packard Inc. So super interesting. I'm bringing up a 5-minute chart here, and this is where Hewlett Packard reported earnings. The earnings weren't bad at all, right? I mean, we can just bring up the earnings here for a moment so that we see it.
It was mixed. It was mixed.
Yeah.
But so what is an earnings play? What are we after? Just to set this up, we're looking for an event, right? Where traders are focused on a particular stock. In this case, it's earnings. And we know there's going to be a reaction. It could be a huge move higher, huge move lower. But as a premium seller and the goal to sell puts to start the wheel, we're looking for the ability to sell puts when there's that indecision and an overreaction that has taken place so we could capitalize on it.
Right. So this is where this morning Hewlett Packard reported earnings. Again, they weren't too bad. So the profits were a little bit better. The revenue was a little bit lower, but we see it's less than 1%. But right now, it's all about guidance. And this is where they issued lower guidance.
Yep. So, with those three things being key, traders just punished HPQ, right? At one point, it was down almost 11%. Right now, it's down 8%. Dipped below $28 a share. With yesterday, it was trading just at 31, 37 at the close. So getting punished, and because of that fall, there's some nice premium in these options. And the other thing we want to look at is support.
Right. So this is where going back here to PowerX Optimizer, on HPQ, we saw some really nice support at the 27 level. So showing here HPQ going back for a year. Let me go on auto. That's where, right, the 27 level offered some great support. And this is where exactly we saw this morning that the put at the 27 level became available.
Yeah, it was looking pretty good. It was trading around 15, 16 cents. I saw a high print of 18 cents, which gave some nice premium. I want to say, was it 15 cents gave 71% annualized based on Friday's expiration?
Yeah, possibly. And this is what I was looking at. So, I mean, we noticed it pretty much right away that HPQ was falling. Now, we don't necessarily want to catch a falling knife. So I still saw it falling here. And this is when I put in an order to sell this put at 20 cents because I thought, maybe we can get another 2 cents. At this point, this is exactly what you said. It was trading at 18 cents. I tried to get 20 cents. And as we see, at this point, it started to pull higher. This is exactly what we wanted to see. So I adjusted my order to 18 cents. It kept pushing higher. I adjusted my order to 16 cents. It kept pushing higher. I adjusted it to 15 cents. And this is where you and I talked and we said, okay, I'm leaving it at 15 cents. Either it comes back, turns around, and I get the 15 cents, or this trade is moving on without us.
Yeah,
And
it really needed to dip back down below 28 because there was actually a decent amount of trading. It looked like at 14 bid, 15 offer. So you were pretty close to getting that 15, but then it just kept moving higher. Didn't get back below 28. I mean, this bar is what we want to see on an earnings play.
yeah.
But after you get a fill.
Yeah, and well, for me, I must say, okay, this was the original order, so I adjusted it once here, I adjusted it twice here, I adjusted it the third time, and that's when I chose I will not chase the trade because
Yeah.
I've done that in the past that I started chasing trades, and this usually ends very, very badly.
And there's data this week, right? So we're looking to fill a slot, and we don't need to chase it. We're still in some other positions, and I think it was a good decision. You were real close to getting a fill. I was watching. I never put an order in. I had an order ready. I was keeping an eye on it. I really wanted to see how we traded around 28, but then it was such a quick rally after the dip. And
Well, that's not quite true. I mean, be honest. Usually, you don't put an order in because you wait first that I'm getting filled, and then you put an order in for 1 cent better.
fact, fact.
Anyhow, so this was picture perfect. If you caught this play, it's great because right now the options are trading at 2 cents, so you can already close it at 90% of the profits just an hour after the markets open, maybe here a couple of hours. So this was just a picture perfect one. I tried, didn't get filled, and then decided I will stop chasing it. So, no trade for me today. All right, let's take another look at what's happening here in the indices. They're pushing a little bit higher, and let me just know if this is helpful at all as we are walking you through our ideas and what we are thinking about it. And if this is helpful at all, do us a favor and give us a like. If this is your first time watching it, consider subscribing to the channel. Hit the little notification bell. This way you get notified whenever we go live, because we go live every day, and hope that what we are sharing with you is helpful to you. If it is, we appreciate a like, and then we'll see you again tomorrow.
Happy trading, everybody.